Hello and happy new year 2024 to you all, whoever's tuning into this video. So I'm just going to discuss how the stock market has gone the past week, the first week of trading in 2024. It hasn't gone great, and there's a number of reasons why. So yeah, you can see I have it here open on FinViz. So Apple, Google, they've all been down, and the likes of Apple, Tesla, Amazon, they've all been down over 5% this particular week, and there's a reason why. Stocks struggled to hold on to a rebound after a dour start to the year as traders stood by wagers that a March rate cut was on the table. So the main points: stocks were off highs after data showed the U.S. service sector slowed in December, but remained above a key level that indicates expansion. The jobs report initially cooled wagers on faster and deeper rate cuts from the Fed, but swap traders eventually reformed bets on roughly 140 basis points after easing this year, with a better than 70% chance of decrease in March. So clearly, the economy is strong enough as of now to withstand the Fed's current evaluated interest rates, according to the chief executive officer of Coastal Wealth. So many on Wall Street remain skeptical of a March rate cut after payroll reports. The key events this week: Richmond Fed President Tom Barkin on FOMC voter in 2024 speaks on Friday. Some of the main moves in the markets: the S&P was little changed at 12:34 p.m. New York time. The Nasdaq 100 rose just 0.1%. The Dow Jones Industrial Average fell 0.2. The MSCI World Index was little changed. The Bloomberg Dollar Spot Index was little changed. The Euro was little changed. The British pound rose 0.3, not a lot. Japanese yen fell 0.1. Bitcoin fell 2.4 to 43,456. Ethereum fell 2.5, and then the treasury yields as well. So the non-farm payrolls were the main thing here. Farm payrolls rose by 216,000, a larger than expected gain, and the unemployment rate held steady at 3.7 in December. So it's all hinging on whether there'll be more interest rate hikes in the US in March. And if things in the economy in the US are good, then the Fed may raise interest rates higher. But if there's a cooling down, maybe they'll hold off and put a pause on interest rates. But the markets are, they're not sure. People aren't sure because it's only the first week of trading and investing. So, well, I guess the main reason why things didn't get off to a great start is there's a lot of hesitation. People aren't sure about the interest rate hikes in March, whether they're going to stay the same, whether they're going to be hiked up more, or whether they'll be dropped down by the Fed. But it all depends on the economy. If things are cooling down, if the economy is, if things are, if there's growth, if there isn't growth, if there's more jobs than expected, and there's more money being pumped into the economy, the Fed will kind of say, look, it's okay to raise interest rates. But if the economy has cooled down, like in Ireland, same thing. If the economy has cooled down and they've got it to where they want it to be, then they won't be raising interest rates further, and hopefully they'd cut them. So a shaky start to 2024 for the stock market, a lot of indecision, but it's only the first week, and it's a while away to March before these interest rate announcements come into being. So happy new year, and thanks for watching. I hope you found it somewhat interesting.